What if I tell you I've been marking your charts wrong? And with the right markup, you can actually optimize your profitability and how to see the market the right way. In this video, you're going to learn how to mark up your charts properly. By the end of this video, you should be a top-notch market reader. You should be able to read price action properly. You should be able to see what you need to see in the market. You should be able to know when price is really on an uptrend, when price is really in a downtrend. And you know how to mark up your support and resistance, which are the key zones in the market, properly. Now, come on, let's get with the video. So today we'll be talking about marking up your charts the right way. So I'm going to be using an example of Euro AUD for this example. So why am I using Euro AUD? I'm using Euro AUD because we have a lot of it's a very busy market. So, or we can even use Euro USD since it's one of the most popular markets everybody is into. So because if the market is not popular, like BTC or maybe like gold that's really trendy, you're not able to mark up your support and resistance properly, and it won't be a good example for you guys, because once you're able to get in tune with how to mark it up with a difficult pair, with a pair that's very busy, you can do it in with every other pair. So now we're going to use Euro USD for this example. So first off, what I do when it comes to marking up my charts, I go on the higher time frame. So this is the weekly time frame now. You can see currently I can see a lot of noise in this particular environment. So simple and easy trick you can use, and this is what I've been using lately and has really improved my results. So I'm going to go to a line chart. I don't know if you use a line chart, but the line chart is a tool that you really need to use, because this just takes out all the wicks, takes out all the noise, takes out all the flutters in the market. So let's go straight into business. So from what we can see here, you can see clearly that there's this resistance zone here. Easy. So let's make it smaller. There's a resistance zone here. There's currently a resistance zone around this area. You can see that price is finding it difficult to break above here at the moment. So there's a resistance zone there. There's also a support zone right around here. There's a support zone around this area. And now there are multiple support zones from here, here, and here, but this is really little. So let's just focus on this particular point. So from here to here, we are looking at how to mark up charts properly. So if you go to the candlesticks now, you can see that we have, let's expand this. So if you go to the candlesticks now, you can see that we have price get to this point, rejects from here, multiple rejection here and here. So see, there's a rejection here, another rejection here, yet another rejection here. So support and resistance basically are just like your stop signs on the road to tell you now you should stop. Then we are going to change direction. So that's just basically a narration you can use for your support and resistance zone. So if you don't know where to stop, how do you know where to move forward? So that's basically what it means. So you need to understand how to mark up your support and resistance zone properly. So because these are areas where you can get the best entries, you can see market changing directions, and the market is literally going to tell you what is going to happen next from if you have the right markups. So you can see a rejection candle, you can see rejections here. So this is a support zone. If price come back to this area now, you're expecting price to at least have a rejection in this area, have a reaction in this area. You can see also there's so many noise here. So this is a support zone. You can see as soon as price broke below this area, came to this area, created this zone, it has been up since then. You can also see here that this is also another place where price has make a significant stop, which serves as a support zone. And you can see here too, resistance. So what have you learned so far? You can see what I've been able to mention here is how you can mark. You can see just with the line chart, it just opens everything clearly. If you go to the candlestick, you can see it's a lot of noise. And remember to do this on a weekly time frame, because the weekly time frame has less and less noise. So with less and less noise, you can mark up properly. So if you go to the daily time frame now, you can see that these areas where we have marked up are still very significant in the market. See, these are the markups we've had. These are the markups we have. These are the markups we have. You can see how price is reacting from there. So you can see this is just an easy place for you to, if you're a daily time trader, you can just come here, set your stop loss right above there, and find your entries. Sometimes it's not always perfect like this, because from the example I'm giving you, I'm just giving you like from a textbook scenario. It's not always perfect like this, but with the line chart creates clarity. So that's the main thing you should learn from this video. Remember to always turn on the line chart. You can see in this particular place, you can see a lot of markups here, because this is the daily chart. So the daily brings up more areas where price has stopped. Where price has stopped, you can see price stopped here, price stopped here, price stopped here. So, but this is a lot of noise. That's why I do this on the weekly time frame. So it's best for you to do this on the weekly time frame. So when you come on the daily time frame, you can find areas where you can function properly and see the market for what it is. So let's clear this up so we can focus on and just dialing into what we are doing. So remember, the goal of this video, what you're planning to learn from this video, is how you can mark up your chart the right way. You can find support and resistance zones where you can capitalize on market movements. So I'm going to cut this off here, so we can just focus on this support and resistance zones around here. So let's cut this off, extend this here, still using the line chart. You can see rejections around this level. Go back to the weekly, see rejections, one, rejection two. You can see even here price came down, broke below it, and went back in. So you can see that zone is a significant zone in the market. So if we go to the daily time frame now, move on to the candlesticks, then you see how clean the market is. So number one thing I've been able to highlight for you to see is, first off, use your line chart. The line chart is your friend, so use your line chart. Then go on the higher time frame. If you're trading on the 15 minutes time frame, you can also mark up on the 4-hour time frame, on the 1-hour time frame, so you can get clarity on where you expect the market to move towards. So now you can see on the daily time frame, you can see multiple rejections here in the zones we have marked up on the weekly time frame. Multiple rejections here, multiple rejections here, multiple rejections here. Price broke through, but price is back in. Multiple rejections here. So if you come to the time frame that I trade in on the 4-hour time frame, see, these are just bunch of opportunities for you to capitalize on. So look at how price in this particular support level, if you're looking to take amount trades here, this is 10 o'clock in the morning, you can buy around here and see price did a 1 to 2 easily before coming back all the way down. You can see price did a 1 to 2 easily here before coming back down, and as it came back down, it still give you another opportunity to buy in. So support and resistance zone basically just highlights opportunity where traders are going to take trades. Traders are going to basically react from. That's the main thing, because price has history, price has a memory. So people that bought here are ready to buy here. If they're still in the market, are ready to buy here. So this has created significant area for price to, when price come around this level, we have people interested in taking action in this level. So if you don't know how to mark up your charts properly, you don't know how to draw your support and resistance properly, you'll probably be seeing trades all around everywhere in the chart. And if you don't get to buy at where you're supposed to buy or sell at where you're supposed to sell, the right place, you end up getting stop loss unnecessarily. So you can see as price came back here again, simple, price came back, still rejects in this area. So you can see that this particular area is a solid area in the market where buyers and sellers are interested, especially at the moment here we are buying. So we have buyers interested in taking action from this level. So now let's go back to the second area, because this, we have dealt with this area. So you can see in this particular area again, similar to this, price came back to those level. Now look at this. This was in March 2023. Price came back to that area in October 2023, and the same reaction it had here, is the same reaction it's having here. But the price action may be different, but it is having the same reaction. When I say the same reaction is people are still interested in buying from this level because price has created a memory in this level and in this particular area. So if you're looking to buy, you can wait for price to break below, then find areas to buy, set your stop loss below, and wait for price to do its thing. And you can do that all around here as the support zone. Now let's visit the resistance zone. So why is it called a resistance zone? We call it a resistance zone because just like a ball, when you hit the ball on the floor, it goes to the ceiling and come back. So that ceiling is the resistance. So this is the ceiling in the market in this particular area. So at this particular price of about 1.2427, this is Euro USD, you can see that price created a support level, a resistance level right around here. Now see, as price got to this place, price broke above it, you can see there's nobody in the world that is interested to buy Euro USD at above 1.2760. Why is that? Because this place is a significant area in the market. There's a resistance zone that it is a ceiling. So when price gets to that place, people expect, the bulk of the market expects the market to fall back into the zone. It has gotten to resistance level. So all we need to just do is just wait and see how far the market is going to stretch before you are ready to jump back in and sell. So if you sell below here, you can easily capture monstrous trading opportunities. Similar to this is what we have around here. So let's see, this is far back as July 2023, and this is here September 2024. More than a year after the first resistance level, price came back to that same level and people are interested in selling. So look at this, sell around here, you can sell around here, you can also sell around here. So what do you expect if price come back to this level again? Because currently price is on the support level around this place where we have been buying. So if price come back to this level again, that's on cue for you to sell from. So basically that's what support and resistance. And so if you even go to the one hour time frames, you can see that the markups are still there. Price is still respecting these areas because these are key zones in the market where you need to pay attention to and capitalize off price movements and price falls and price dips. So these are all the things you need to pay attention to when it comes to marking your support and resistance zone. So totally what we have been able to cover, let's write this down. What we've been able to cover, we've been able to cover the fact that you need your line chart. You need to go on the higher time frame. So the weekly time frame is very key. So weekly time frame, and you need to draw your zones properly. So once you have been able to put on your line chart, figure out those zones, you go on the higher time frame, you have seen those zones properly, then draw the right support and resistance level. Then all you need to do now is just wait patiently for price to get to this level. Then execute. So this is just a simple 5 outlined steps. First off, line chart, use the line chart, then go on the weekly time frame, then draw the right support and resistance level based on what I've shown you. So remember, price is always moving. If it's going upward, it's going like this. So when it gets to this level and it fails to break above this level here, it creates a resistance level there. So it goes back, continue doing its thing, keeps going, get back to those level again, Now this is a zone that is paramount in the market. You can see if you draw your resistance level here, you can see one touch to the top, 2, 3. This went a bit shy, then 4. So you can see this is a memorable place in the market where price action is key around those areas. Traders are interested in selling from these areas. So now let's say we are looking for support zones to mark up. So price is going this way, the way price trends, creates a bottom here, goes as high as this, comes back down to do that level again, finds support, another support, and it keeps going and doing its thing. So this is basically what price action is all about. So if you mark up your zones properly, you can see that what I'm using looks like the line chart. So if you mark up your zones properly, you can see one touch to the bottom, two touch to the bottom. Now this is creating a price history, like where price, anytime price comes to this level, traders are interested in taking action. So these are key zones you need to pay attention to. So the first thing, the line charts. Second thing, you go to the higher time frame, either the weekly time frame or the daily time frame as you see fit. So let's say the daily time frame slash the daily time frame. The higher the time frame, the higher the time frame, the more the decisions you are making are very concrete. So now on the third step is to draw your support and resistance levels properly. So see how I drew it. Just use a box because it is not a price point, it is a zone. So you need to use your box to draw the zones properly. And when you draw the zones, make sure you use the line chart so that when you turn on the back to the candlesticks, the wicks can be above the zones, but the body close is on the zone. So you can see it around this level. So what you need to do, just wait patiently for price to come to those levels, make reactions in those levels, and you execute. C'est So comment in the comment section what you have learned, and if you have any questions to ask, don't forget to type in the comment box. I'll be here to answer as much questions as possible. And I'll see you guys in the next video. Bye for now.